Hello everyone, myself Nilesh Shah from Nilesh Shah Financial Services. Today I want to talk about something that quietly affects a lot of construction business owners. It is not always lack of sales, it is not always lack of work, it is not always lack of good employees. Sometimes the real problem is this. You are doing the job, you are completing the project, the customer is happy, the invoice is paid, but at the end of the job, you look at your bank account and wonder, where did the profit go? And if you have ever felt that way as a contractor, builder, remodeler, some subcontractor, or construction business owner, I want you to stay with me today because today we are talking about the three job costing mistakes that quietly kill construction profit. And I want to say this very clearly. In construction, profit is not made only when you send the invoice. Profit is protected when you track the job correctly from beginning to end. That is where many businesses lose money without realizing it. Now, let's talk about the personal story and the real life connection. Let me share something from my experience working with business owners. Many construction business owners are very skilled at what they do. They know the work, tools, crews, materials, customers. They know how to get the job done. But when it comes to the numbers behind each job, many owners are forced to guess. And I understand why. Because when you are running a construction business, you are not sitting at a desk all day looking at reports. You are answering calls, you are checking job sites, you are dealing with employees, you are talking to vendors, you are handling customer expectations, you are fixing problems, you are making sure the job actually gets completed. So, bookkeeping and job costing often get pushed to the side. But here is a problem. When job costing is not accurate, the business owner may feel like they are making money, but the numbers may be telling a very different story. I have seen business owners work very hard, take on more jobs, increase revenue, and still feel financial pressure. And one of the biggest reasons is this: they do not know which jobs are actually profitable and which jobs are actually draining cash. That is why this topic is very, very important. Why job costing matters so much in a construction business. Before we talk about these three mistakes, let us first understand job costing. Job costing simply means tracking the income and expenses for each and every specific job or project. For example, if you are working on a remodeling project, you want to know how much revenue come from that job, how much labor went into that job, how much material was used, how much subcontractor cost was involved, how much equipment, permits, disposal, fuel and other costs were connected to that job, how much profit was left after all those costs. This is very different from regular bookkeeping. Regular bookkeeping may tell you your business made money this month, but job costing tells you this job made money, this job lost money, this job looked profitable but actually had a very low margin. This type of project should be priced higher next time. That is the power of job costing. Without the job costing, construction owners are often running the business based on bank balance, gut feeling, and memory. And that can be dangerous because the bank balance does not always tell the truth. A full bank account today does not mean the job was profitable. It may simply mean you collected a deposit, or you have paid your vendor bills yet, or payroll has not cleared yet, or subcontractors have not submitted invoices yet. That is why construction business need job costing. Let's talk about the mistake number one. Labor is not tracked properly by job. The first job costing mistake is this. This is one of the biggest profit killers in construction. Why? Because labor is often one of the largest costs in construction business. You may estimate that a job will take 80 labor hours, but in reality, it may take 120 hours. Maybe the crew had to redo part of the work. Maybe there was a delay. Maybe the customer changed something. Maybe the site was not ready. Maybe your employee had to go back 2 or 3 extra times. If those extra labor hours are not tracked to the job, the owner may never see the true cost. The job may look profitable on paper, but labor quietly eats the margin. Let me give you a simple example. You bid a project for $20,000. You estimated labor cost at 5,000. Materials were estimated at $7,000. You expected around $8,000 before overhead and profit planning, but the labor was not tracked properly. At the end of the job, you found out labor cost $8,500. That is an extra $3,500. Now you expected profit change dramatically. And if this happens on multiple jobs, the business owner starts feeling cash pressure. Not because they are not working, not because they are lazy, not because they are getting clients, not getting clients, but because labor costs are leaking profit job by job. How labor tracking problems show up. Here are the some signs this may be happening in your construction business. Your crew is busy, but profit is not increasing. Payroll feels heavy every week. You do not know exactly how many labor hours went into the each project or job. Employees work on multiple jobs, but time is not coded properly. Jobs take longer than estimated, but the estimate is never updated for future pricing. You feel like some jobs were profitable, but you cannot prove it. This is where a lot of construction business get stuck. The owner says, I know we are busy, I know we are working, but I do not understand why cash is still tight. Very often, the answer is hidden inside labor tracking. So, what to do instead? The solution is not always complicated. Start by tracking labor by job. Every hour should answer one question: which job did this labor belong to? If your employees work on multiple projects, their time should be assigned to the correct job. If you use QuickBooks, payroll software, or time tracking tools, the goal is to connect labor to the job. This gives you better visibility. You can see which jobs are labor heavy, which crews are efficient, which project type takes longer than expected, which estimates need to be adjusted, which jobs should not be priced the same way again. This is where bookkeeping becomes more than data entry, it becomes decision support. Now, let's talk about mistake number two. Materials and subcontractor cost are not coded to the right job. This is another quite profit killer. In construction, material costs move fast. You may buy lumber, electrical supplies, plumbing materials, flooring, fixtures, paint, hardware, concrete, or other supplies. Sometimes these purchases happen on credit cards. Sometimes vendor bills comes later. Sometimes receipts sit in the truck. Sometimes one vendor invoice includes materials for multiple jobs. Sometimes a subcontractor invoice comes in after the job is almost complete. If these costs are not coded properly to the correct job, your job profitability report becomes unreliable. And when reports are unreliable, owner owners stop trusting the numbers. Then they go back to gut feeling, and gut feeling can be expensive. Simple example of material cost problem. Let us say you are working on a job A and job B. You buy $4,000 of materials. Some of these materials are for job A. some are for job B. But in QuickBooks, everything gets entered as general material expense. Now, what happens? Job A may look more profitable than it really is. Job B may also look incorrect. Your business profit and loss may show the total expense, but your job report does not tell the truth. So, when you sit down and ask, did we make money on job A? The answer is unclear. And when the answer is unclear, you cannot make strong business decisions. You cannot price future jobs correctly. You cannot identify which projects are profitable. You cannot know which customers or project types are worth pursuing. Why this mistake hurts construction owners? This mistake hurts because many construction owners make future pricing decisions based on past jobs. But if past jobs were not recorded correctly, the future estimate is built on bad information. That means you may keep underpricing the same type of work again and again, and that is painful because from the outside, the business looks successful. You are getting jobs, you are sending invoices, you are collecting money, you are growing revenue, but inside, profit is leaking. That is why I always say revenue is not the same as profit, and profit is not the same as cash. A construction business can have revenue and still struggle. A construction business can show profit and still have cash flow problems. That is why proper job costing is very important. What to do instead? Here is what I recommend. Every material purchase and subcontractor bill should be reviewed with this question: which job costing this belongs to? If one receipt includes materials for more than one job, split it properly. If one vendor bill includes cost for multiple jobs, allocate it properly. If subcontractors work on specific projects, code their bills to those projects. This may feel like extra work in the beginning, but it saves a lot of confusion later because now when you look at your reports, you are not guessing. You can see the real cost of the job. And once you know the real cost, you can improve pricing, protect margins, and make better decisions. Mistake number three: overhead is ignored when pricing jobs. This one is very important. Many construction owners estimate direct cost like labor and material, but they forget about overhead. Overhead includes the cost required to keep the business running. For example, insurance, rent, vehicles, fuel, office expenses, software, phone bills, admin, payroll, accounting and bookkeeping, licenses and permits, equipment, repairs and maintenance, marketing, owner salary. These costs may not belong to one specific job, but they still need to be paid. And if your jobs are not priced to cover overhead, your business may stay busy but still struggle financially. Now, let's talk about the personal touch around overhead. This is where I feel for construction business owners because many owners are honest, hardworking people. They do not want to overcharge, they want to be fair, they want to win the job, they want to help the customer. But sometimes, in trying to keep the price reasonable, they forget to include the real cost of running the business. And then what happens? The customer gets a good deal, the crew gets paid, the vendors get paid, the subcontractors get paid, but the owner is left wondering why there is not enough money left. That is not fair to the owner. A construction business owner takes the risk. They carry the stress, they deal with the problems, they guarantee the work, they manage people, they handle complaints, they deserve to make a healthy profit. But healthy profit does not happen by accident. It happens when the pricing includes labor, materials, subcontractors, overhead, and profit. Simple overhead example, let me give it to you. Let us say your business has $12,000 per month in overhead, that is $144,000 per year. Now imagine you complete many jobs during the year, but your pricing only covers labor and materials. Where will the overhead money comes from? It has to come from the job profit. But if you never plan for it, profit disappears quickly. This is why some owners say, we made money on the job, but I still do not have enough left. The reason may be what overhead was never properly included in the price. You need to know your overhead number. You should know approximately how much it costs every month just to keep the business open. Then your pricing should be built to cover direct labor, materials, subcontractors, equipment, and job related cost, overhead allocation, desired profit margin. This gives you a healthier pricing picture. It also helps you avoid taking jobs that look good on the surface but do not support the business. Not every job is a good job. A job that keeps your crew busy but does not produce profit may actually weaken the business. That is why number matter. The bigger picture. Let us bring this together. The three job costing mistakes are: labor is not tracked properly by job, materials and subcontractor cost are not coded to the right job, overhead is ignored when pricing jobs. Any of these can hurt profit, but when all three happen together, the damage can be serious. You may think we are growing, but the numbers may say we are working harder for less money, and that is not what you want. You do not want to build a business that only creates stress. You want to build a business that creates clarity, control, and confidence. You want to know which jobs make money, which jobs lose money, which customers are profitable, which services should be priced higher, which project types are worth repeating, where cash is leaking, what needs to change before the next job. This is the difference between simply doing construction work and truly running a construction business. I want to speak directly to the construction business owner for a moment. You may be carrying a lot. You may be first one up in the morning. You may be the last one thinking about problems at night. You may be worried about payroll. You may be waiting on customers' pay. You may be dealing with materials price changes. You may be managing employees, subcontractors, customers, vendors, and deadlines all at once. And after all that, you still have to make sure the business is profitable. That is a lot. So if your numbers feel messy, I do not want you to feel embarrassed. Many good business owners are in the same situation. The issue is not that you are bad at business. The issue is that construction has moving parts and the accounting system has to be set up to match the reality of the work. A regular profit and loss report is not always enough. You need to job level clarity. You need to know what each job is really doing to your cash and profit. Practical action steps for this week: review your last three completed jobs. Ask yourself, do I know the actual profit on each job? Look at labor, where labor hours tracked by job. Look at materials, where materials coded to the right job. Look at subcontractors, where subcontractor invoices assigned to the right project. Look at overhead. Did my pricing include the cost of running the business? Compare estimate versus actual. Where did the job go over budget? Use the lesson on your next quote. Ask, what needs to change before I price the next job? These questions alone can open your eyes. Sometimes one report can show show you where thousands of dollars are leaking. Strong teaching moment. Here is something I want you to remember. In construction, the job is not truly complete when the physical work is finished. The job is complete when the numbers are reviewed, because without reviewing the numbers, you may repeat the same mistake on the next job. You may underprice again. You may miss labor overruns again. You may forget overhead again. You may fail to build change orders again. You may keep growing revenue but not growing profit. That is why job costing is not just accounting. Job costing is protection. It protects your profit, it protects your cash flow, it protects your time, it protects your future decisions. If you are a construction business owner and you are not sure whether your jobs are truly profitable, this is exactly where we help. At Nilesh Shah Financial Services, we help business owners gain clarity over their numbers. For construction businesses, that means helping you understand your job cost, your project profitability, your cash flow, and the financial leaks that may be hurting your bottom line. We look at questions like, are labor costs being tracked correctly? Are materials and subcontractors being assigned to the right jobs? Are your pricing jobs to cover overhead and profit? Are your books giving you real business clarity? Are you making decisions based on numbers or guesswork? If you feel like your business is busy but the profit is not showing up the way it should, let us talk. You can schedule a profit and cash flow analysis session using my calendar link. During that session, we can look at where your numbers may be unclear and what steps may help you to improve profit and cash flow. So, let me close with this. You work very hard to guess your profit. You work too hard to finish jobs and still wonder where the money went. You work very hard, let messy jobs costing quietly take away your margin. Construction is already a tough business. Your numbers should not make it tougher. With the right job costing system, you can stop guessing. You can see which jobs are helping you grow. You can see which jobs are hurting your cash flow. You can price with more confidence. You can protect your profit before the damage is done. So, remember the three mistakes: not tracking labor by job, not coding materials and subcontractors to the right job, not including overhead when pricing jobs. Fix these three areas and you may start seeing your construction business very differently. Thank you for joining me today. This is Nilesh Shah from Nilesh Shah Financial Services. We help business owners get clarity, control, and confidence in their numbers. I will see you next time. Thank you.